Welcome back to Fast Market here on the TD Ameritrade Network. Let's bring in our next guest for our cash tag segment, and that's going to be Andy Swan, the co-founder of Likefolio. Welcome back to the show, Andy.
Thank you.
All right, so we're talking Monster Beverage. You know, I was taking a look at this earlier. The stock, hit all-time highs earlier this month. Their sales are double digits year-over-year growth. Even on a quarterly basis, they seem to be outperforming all of its other competitors. But what kind of data are you guys seeing out of Likefolio to maybe substantiate this rally that we've seen?
Yeah, so Monster's clearly the king of energy drinks, and that's a really good place to be right now. If you look at macro consumer trends, people are looking for, that extra boost of energy. We see a consistent increase in the number of people talking about seeking caffeine or improved energy. And not just that, we're seeing people really look for that from alternative sources. Coffee's kind of on the way out, energy drinks are on the way in, and Monster's absolutely the number one in this space by a considerable margin. The Monster brand is dominant. Their ability to acquire and defend shelf space in gas stations, grocery stores, even gyms and vending machines is pretty much unparalleled compared to the rest of the industry. They've, kind of given the Heisman to Coke trying to come out with energy solutions, Pepsi. Monster's in a league of its own, well beyond the next competitor, Red Bull. The one thing I will say from a competitive standpoint, I think they do have some competition brewing from Celsius brands, ticker symbol CELH, a company that Likefolio has been hot on for quite a while, been a really, really good stock to own during that time frame. And the reason is, as you can see on this chart, it occupies that top right of our outlier grid. Something we really love to see is when a company is both growing in consumer demand and very high on the consumer happiness scale. So Celsius is there, Monster is not, but what you'll also see is Monster Energy right up there in terms of happiness with Celsius. And a lot of that is because Monster Ultra is kind of like Celsius in terms of it's their answer to a healthier, lower calorie alternative. And Monster's done a very good job of getting that on the shelves, getting that marketed, and getting it in consumers' hands, and people like it.
Andy, when you read about these two companies, Monster and Celsius, there's not a real comparison in terms of market share, right? But when you throw in Red Bull, now there almost is a duopoly between Red Bull and Monster, right? And Celsius, yep. I've got Celsius, I've got Red Bull 36.1, Monster 31.1, Celsius 2.6. But you've been on this show before talking about Celsius and how popular this brand is and how good the metrics are. Which brand should we be watching? Because Monster's affiliation with Coca-Cola is strong and powerful and gives it a lot of advantages. But this healthier, kind of like the Chipotle of energy drinks, right? The healthier Celsius. Is that just eventually going to get more and more popular?
Yeah, well, the good thing about Celsius is, it only has 2% market share. So there's a lot of upside there. And when you've got a tailwind of a growing industry, having a small portion of market share can be a much larger opportunity for investors. But on the other hand, Monster's also in a really good spot. It's clearly, like I said, got the distribution nailed, got the marketing, the brand identification is, top of the line in a growing industry and reacting really well to competitors. I think, it's really just more of, do I want to be on the more volatile, a little bit riskier, small company side of things with bigger upside, or do I want the tried and true Monster hitting all-time highs with the stock, like Tom mentioned, is a really big deal. And the upside for Monster is, just like for Celsius, is unlimited. I mean, both of these are in an industry with a tailwind and doing a very, very good job.
Yeah, and Andy, I did an unscientific tweet earlier before the show started, and I said coffee Red Bull, Monster, and so far the results, coffee's still in the lead, but you're seeing a pullback as far as your data goes here in coffee drinkers, but Starbucks seems to be doing okay.
Yeah, Starbucks is doing okay, and the reason that they're doing okay is because they're able to, throw the food into there. They've got all those different kinds of drinks that I don't know if you would necessarily qualify as pure coffee drinks. They look more like milkshakes, I think, to me a lot of times. But people love them. Starbucks isn't going anywhere. Monster isn't going anywhere. We think Celsius is on the rise. This is an industry and a movement towards higher energy drinks that isn't slowing down, and we think there will be a lot of winners in this space.
Now, expectations pretty high going into earnings for this company. Expected sales to increase about 12%. What kind of earnings score do you have on Monster into this result?
Yeah, we think that Wall Street has it right. We think sales will be up about 11 to 13%. That's where our data shows them coming in. I think overall pretty neutral going into earnings, but if I had to bet, I would be looking at that unlimited upside of new all-time highs. I really like playing earnings when companies, if they get to that all-time high, there's no resistance, there's no supply overhead, and it could move quickly over the next 15 to 30 days. So that's a big if, but there's always a shot when you've got a company like Monster.
Yeah, and the fact that Coke owns nearly 20% of Monster at this point. Is it a takeout target? Those rumors have been swirling for years. Maybe there's a little bit of premium to the stock there also. All right, thanks, Andy. Appreciate it.
Thanks.
All right, that's Andy Swan, co-founder of Likefolio, breaking down Monster,